I end up getting asked to help a lot of founders raise money or to invest in them. And so Docsend is at the level of success where we can launch a free service where we have two analysts working on it with a bit of tech behind it and analyze decks and make intros to lead VCs for pre-seed and seed stage companies. So because I was like otherwise doing that myself. So now I just divert all my personal lead flow to this fundraising network. And I think Docsend's kind of in a unique spot because we get used for the pitch decks and fundraising so often that we can do that. But really any company could have launched this. And it's not exclusive to like other things. Like you should still, if you're a founder, you use this, then also go get your other intros and like do your normal thing. But yeah, it's been a really fun project to run. And feedback so far has been really positive. So yeah. We've had a number of companies that we've gotten funded. Like if you're a founder, like what you're supposed to do is like get warm intros to all your VCs, which is just really time consuming. And then also founders are in general quite bad at list building. Like they're like, oh, can you introduce me to Sequoia? And I'm like, well, Sequoia doesn't focus on seed, like that's not their business. So like, sure, they do actually have a seed fund, but it's like go focus on the funds that like or focus on your stage investing. So we've got like I think 70 or 80 or something lead like firms that just focus on pre-seed or seed, and we know what each of them invest in. And so then a founder like meets our quality bar. Only like 20% of the decks we get meet the quality bar. Then we know like, oh, you're consumer or your B2B SaaS or whatever it is. And then like we just send them off to the relevant VCs and then make intros. So not rocket science, but it's helpful. And yeah, a bunch of them have gotten funded, which is great. I've angel invested in one recently as well. Which is it's good for deal flow if that was my goal, but I'm sure we'll get into this, like as a founder CEO, like what's your motivation for investing? This is my second startup. Docsend is the second company I started. The first one we sold to Facebook as kind of a talent acquisition back in 2011, which is a whole story unto itself. But then I started angel investing while I was working at Facebook, and it's been a whole learning curve for me. What I found is that often I get leveraged a lot by my investments for help. Like even though I'm a tiny check, and I'm always like, go use like your big investors, and they're like, no, I want your help on something. So my bar is usually like, would I help this person anyway? Like if they needed my help, and then investing is just a way to formalize it. But I do try to be protective of my time, which is usually the bigger concern. I just feel bad if I invest in a company and they ask me for help later and then I ignore them. I'm like, that just feels wrong. So that's how I do it. And I just find it really interesting and fun to follow other companies. Like Slava, I'm sure it's the same for you. Like having worked on Indiegogo for so long, it's just nice to get to know other founders and like see different problem spaces. And especially for first time founders, there are a lot of things that are just the same, like independent of like what category of software you're in or like what you're building, just around like company building or fundraising or that sort of stuff. And so it feels really good just to be helpful, even if it's just checking in once every couple of weeks for an hour or something, talking through problems they've got. So that's my motivation. And then, it's been really fun to see, like, I mean, a lot of mine have done quite well, but it's definitely, it would be scary if I was doing this to make money, but if I'm doing this for fun, then it's just fun and very interesting.
Yeah, and that's a pretty broad piece of advice. Don't do this to make money, right? The chances of it are low, but the successes are high. But you got to do it out of passion and drive for other founders as well. And then, go ahead, Russ.
I was going to say that also, like for me and Docsend, like one of my rules on fundraising for our company, we've been very capital efficient. We only raised like 15 million. Has been never take money from someone who can't afford to lose it. Like you don't want to be the concentration risk for anyone, because then all the horror stories I hear from other founders are like investors who actually care about their outcome, and then they get very involved in things. So, yeah.
Is there Do you have a mission with your investing? Do you have a thesis at all, or is it just, hey, here's an operator, here's an idea, I think it's great, and let's go for it?
For me, like what I look for, I mean, obviously things I have more experience with, I gravitate towards. I find consumer to be relatively terrifying. So I worked at Facebook for a while, and then when we were thinking about starting Docsend, we were like, oh, maybe we do something in the consumer world. And consumer is just like binary. It's just like works or doesn't. You're like, I don't understand. How do you create Instagram? I'm like, I don't know. Whereas like B2B is just, you can do more research, like you can do more customer development. And so there's just ways you can de-risk it. So I tend to stick with, just me personally, the Docsend fundraising network is totally general. Although we do struggle with what to do with like a lot of CPG ideas, like that's not really venture. There's a whole separate thing for that. But they're pretty general. Me personally, yeah, anything B2B. So like a couple of my investments, like Chat Desk, like is a company that is like better like version of like support software. Really interesting mission behind it too, like a really feel good mission. But effectively like better support, targeting primarily e-commerce, or Mutiny, which is just like website personalization at scale. Is how I think about it. And so when I see these like pitches, like yes, they're really strong founders who I would love to chat with anyway and help anyway. And then they have ideas that just like kind of make sense to me. It's less about like, oh, I'm not going to invest because their market sizing was like too small, or, some of it is kind of pattern recognition. And then, it's like a question of like, would I want to start that business? Like, is that a thing I'd like to work on? And then if so, yeah, happy to invest.
Great. Thank you for that. And I think that leads me, let's imagine we're doing diligence on a company, and being a CEO, that's seen major growth. Is there something that you look at in a founding team, or specifically the CEO, as you're doing diligence, to say, hey, this is, for me, it was, we always used to do would I work for this person? What if the tables were turned, would I be comfortable and excited to work for the CEO? Maybe we can talk a little bit about that.
I tend to be very sensitive to any inconsistency. So it's less about what I'm like looking for. Like they've got to, but like, if there are just a lot of ways, like tiny ways that a founder can be inconsistent in terms of how they talk about the opportunity or their experience with the opportunity. And I tend to like founders who are just like pretty upfront about like, what work have you done on this, and how certain, like what evidence, it's not even like how certain are you, it's like what evidence do you have, for and against, like continue to do this type of thing. And surprisingly few founders are like upfront about that, because they're in like sales mode, right? And it's like, I don't want you to sell to me. I want you to present the evidence that you yourself are using for this, and then I can decide on that. So that's also probably a personality thing too. But yeah, that's something that I look for. And then just excitement and passion, like people who are like really want to do the thing. Cause it is a really long road, right? Like almost everyone fails. The companies that make it, like you're dedicating a decade of your life to something. So you gotta be pretty excited about it. So, and that excitement is infectious, right? If someone really cares. It comes through in how they pitch in their deck, and then it's really needed to like hire and culture and company build, right? So I tend to like that too.
Excellent. Do you look at let's say structures of first couple employees, if it was an equity or if it's straight cash or things like that, and how they really encourage, let's say, that culture, the drive out of their employees, things like that?
I've seen it both ways, in terms of like how to company build, and I think that's actually a really interesting thing to talk about. Is just like how it's there is the decision criteria for making investments. There is like deal flow, how to find more like investments, and then there's like how do you help your existing investments type of thing, or the advice that you give them. And on the kind of early company building side of things, recruiting is hard, and convincing people, and so certainly giving up more equity. They're pretty standard market numbers for this sort of stuff. One of the things I try to like talk to founders about is like not selling too much to early employees, like get people who just buy in, like because churn from early employees is just really detrimental to your company. So your first few hires, like you want to make sure that they're hopefully going to stick around for a while. It's totally recoverable if you have to fire them. And I find that to be very common, that founders, despite my advice or whatever, the first few employees are mishires, and then I think firing them soon. That's the thing I actually end up spending more time on when I talk to founders, is like, is there anyone you should fire right now? Like, like you should do that and hire someone else, because if you keep them, that's going to be a bigger problem for you longer term, culturally anyway. So, but yeah, more equity, less cash, right? But that also tells you that someone's really motivated to work on this problem if they're willing to take more equity, and cash is king early on, certainly. And so, yeah.
Okay, so now when it comes to more on the personal, or what you're seeing in your own environments, is there sectors that you think are hot, or are there sectors you think you would stay away from?
Yeah, well, so Docsend has some like research on this, actually, like by vertical, how much startups raise and their success rate. And so it's like hardware, more capital intensive, right? Like marketplaces also has a low success rate of fundraising. There are just relatively few marketplaces that can or should be built, but when they do get funded, they get funded a lot more. B2B SaaS is like kind of on the low end, because you don't necessarily need that much capital to get it going. I mean, there are things that are going to be created across all these verticals, right? So, personally, yeah, I'm super bullish on SaaS, like, just because the business model is so great. Like, you have this decreasing cost curve. Like, it costs so little to like build or run software, and there's so much opportunity for software to help with stuff. There's so many inefficiencies. So I just think the market's huge, and it will continue to be really, really big. There's stuff in like ag tech that I like. I'm from South Dakota originally. There's a lot of farmland out there. I don't know enough about it, though, so I tend to stay away. I just think the up the middle, like B2B SaaS, I wish there were just more founders starting B2B SaaS companies. Like, I think this is such a huge market. And then the big differentiation there is between like kind of enterprise, or like kind of that self-serve, like product-led growth trajectory, which is something I spend a lot of time thinking about, because it is much higher beta to do the enterprise like SaaS model, like doing outbound. Like, there's got to be good like founder experience for that, and those founders tend to be older. If you're doing like product-led growth, like inbound, like that is in some ways a little safer. But yeah, I put those in like two very distinct buckets that I judge differently.
Excellent. And then within that SaaS bucket, is there specific areas you think that are really taking off for you, that you've noticed some trends or anything like that?
During the pandemic, right? Anything helping with remote work is just like, oh my gosh, And so there've been a surprising number of companies that would not have been created otherwise, and wouldn't be things that the pandemic has enabled to be real things. And then there are trends that have been accelerated that would have, there are trends that were happening anyway that have been like kind of like accelerated because of the pandemic. But yeah, obviously, like remote work is huge. E-commerce is booming, and then so fixing anything there. I think I'm anticipating a huge kind of surge in like services startups, or things that help with services or travel. Like, travel is going to happen again. There's going to be like a big boom. So I've been seeing more like decks about like, well, what does the world look like when that happens again, and how do we kind of insert ourselves and help with that? Health tech, obviously, as Slava mentioned, is huge right now, like dealing with things in the pandemic, but then just also generally health tech needs a lot of help. So those are areas.
I do have a question from you. Starting investing until today, are there things that you can maybe share, big learnings, mistakes that you made along the way, things that you said, hey, I would definitely look at this, or maybe it was too far outside of my knowledge base, but I made the investment, I couldn't help, or things like that?
Um, I find one of my biggest value adds to founders is just being really direct or like blunt about stuff, whether that's you should fire somebody or your company is just not going to make it, just so you know. I'm pretty sure you're going to go out of business. Therefore, like, what do you want to do about that? So, and that's a learning I've had is just, the surprising number of investors like aren't like really blunt. And I think it's just kind of a weird relationship in many ways, the founder and their investors. And investors have like a lot of silent judgments they don't share. And so as an angel investor, if I have those thoughts and I share them, they're useful, surprising amount of the time. So I just try to cut to the chase typically when I'm catching up with a founder in any situation, but certainly if I've invested in their company. So that's probably my biggest learning there, and surprisingly, one of the ways I've been most helpful.
Excellent. Thank you. I think we're at time. I'm not getting a cutoff necessarily, but we have maybe a couple of minutes left before we close. So I guess my learnings are no hard feelings, be blunt, don't invest to make money, and if it's serendipitous, it happens. Is there, for people to get in touch, what's the best way for them to do that?
LinkedIn, Twitter, I'm pretty easily findable on the web, but yeah, just add me on LinkedIn and put a note on it.
Excellent. Well, I think with that, we can wrap this up. Just making sure we're doing this all correct here, and we can jump on to the next session.
Cool. Thanks all.